You only sell your business one time, so you better do it right. Most business owners leave millions on the table because they don't prepare properly before they sell. Now today, I'm gonna walk you through the 5 things you absolutely must do before selling your business if you wanna maximize your payday and protect your hard-earned wealth. By the end of this video, you're gonna know exactly how to position your business for a high-value sale and avoid the biggest mistakes that cost entrepreneurs millions of dollars. Now here's why selling a business requires adequate preparation. Most business owners sell emotionally, not strategically. And here's a fact. 75% of business owners regret selling their company within a year because they didn't plan properly, and that's according to the Exit Planning Institute. That's not a good situation to find yourself in. So here's an example. A business owner takes an unsolicited offer. That's when someone smiles and dials, you get a cold call, and they offer you an opportunity to buy your business from you. So a business owner takes that unsolicited offer without any due diligence, without shopping around to see what other deals might be out there, without trying to figure out if it's even a good price or a good deal in general. And then they realize that they massively underpriced their company, or that there was maybe some like poisonous clause that was actually snuck into the final agreement, which ends up hurting them down the road. Now, here's why this happens. Normally, people who go through an incident like this, they haven't done an adequate job of planning out their exit strategy. They probably haven't put together a financial plan to determine how much they actually need to sell their company for in order for them to kind of go off to that next stage of life. They haven't done a financial plan which helps them out with tax efficiency and how to optimize their business valuation. Probably don't know what their business is worth today, let alone what it could be worth 3 to 5 years from today if they actually hit on all their growth metrics they're looking for. And then they normally have no plan for what they actually want to do with the proceeds after selling. Could you imagine selling your business for 10, 20, 50, $100 million and not knowing in advance how you're going to invest that money after you get it? That's a recipe for an outright disaster. Selling a business isn't just about the sale price, it's about structuring the deal correctly so that you can protect your long-term financial future. All right, so here's the 5 things you must do before selling your business. Number 1, you need to get a true valuation, not some offer that you didn't ask for. You need to get a market valuation to determine what your company is worth today if you were to actively market it to multiple buyers and you ask them all to put their best foot forward and actually bid on your company. The reason you need to do that is most business owners undervalue their company, or they accept the first offer because they think it's a huge chunk of money. You know, as an example, a business that you might think is worth 20 million bucks might actually command 50 million or more if positioned correctly. So what you need to do is you need to hire somebody who can actually give you an accurate valuation of what your company might be worth. It could be an M&A advisor, it could be a CPA, it could be a valuation expert, it could be a firm like ours that works with clients like this on a regular basis to get a proper business valuation assessment, and we do this for clients all the time. Don't assume an offer is fair. Get an independent valuation done today. Even if you're not looking to sell for 3, 5, 10 years. If your goal is to sell your business for $50 million, $100 million, whatever that long-term goal is, and you realize your business is only worth $5 or $10 million today, now you know where you're at, where you want to be, and you can build out a plan to get you from point A to point B in the most efficient manner possible. Step 2, you need to strive for operational and financial excellence. And the reason for that is buyers want clean, organized, transparent financials. They want to know where the dollars and cents are going. And they want to buy a well-oiled machine, a company that operates incredibly well, even if you, as the CEO or the business owner, might be on a 30, 60, 90-day vacation. You want to know that that company is still operating flawlessly. Now, an example here is that a company with messy books is actually typically going to receive a lower multiple or risk deal failure because it's a sloppy mess. And in order for a buyer to get comfortable with the creative accounting that you've been doing to try to minimize your taxes, that's going to turn off a lot of potential buyers that might have the deepest pockets, who might be able to stroke you the biggest check. So you want to make sure your financials are clean. Now, here are a few things you can do. First and foremost, from an operational excellence standpoint, I would suggest that you consider EOS, the Entrepreneurial Operating System. There's a lot of EO members and YPO members who strongly believe in this, but basically what it does is it takes an operational structure that you would typically find like in a Fortune 500 company, and it brings it down to the lower middle market companies that we all operate, right? The privately held lower middle market companies. And it provides us with a framework for operational excellence. We want to make sure we have a strong management team. We want to make sure we have all the right people in the right seats on the bus. And we want to develop a bunch of KPIs, key performance indicators, and we want to live and die by those KPIs, because that takes a lot of the emotions within your business out of the equation. At that point, what really matters is whether or not the numbers are being hit. You also want to make sure that you have 3 to 5 years of clean financial statements. Clean. Get rid of all that funny business, all that monopoly money, all that stuff that shouldn't be in there. Clean them, adjust them, normalize them. You want to eliminate personal expenses that might be mixed into the business. Again, adjust those out, normalize that. And you want to automate and document key processes so that you can reduce dependency on you, the business owner. It's crystal clear that buyers are willing to pay more for well-structured, scalable businesses. The third step is you want to minimize taxes and structure the sale properly. And the biggest reason for that is a poorly structured sale can cost you millions of dollars in unnecessary taxes. So, as an example, if a business owner sells for $50 million but nets only $25 million due to taxes and bad structuring, that's not a fun situation to find yourself in when maybe the taxes could have been $10 million instead of $25 million. Okay? What you need to do here is you need to work with somebody who is a tax strategist, not a tax preparer, a tax strategist. And you need to ask yourself a question as to whether or not the CPA you currently work with is a tax preparer. They tell you exactly what you owe every year in tax. Or are they a tax strategist architect, someone who's willing to go to work and put together a blueprint or a framework and come up with creative and sophisticated strategies to minimize your tax bill every single year? That's the kind of person you want to work with. And let me just give you a few examples of some things that we've done for some of our clients. Little might you know that Section 1202 allows you to sell your business and eliminate capital gains on up to $10 million. Most people don't know about that one. Then there's a capital gains deferral strategy, whereby the strategy works by having you, the taxpayer, sell your business to an intermediary trust, and then you have the trust facilitate the asset sale over the course of time, which protects you from paying the capital gains all in that first year. You can pay them over the course of several years so that your money's still growing and compounding for you. So, having smart strategies can save you millions of dollars. Find a tax strategist. And the fourth step is you have to know in advance how you're going to invest the proceeds. You're not just going to cash out and put the money under the mattress. And the reason for that is 90% of business owners, they actually don't have a post-sale wealth plan. They don't know exactly how to invest that $10 million, $25 million, $100 million check they might get. I mean, that sounds great, but how do you turn all of that money into long-term financial security? Well, what you could do is you could start off by diversifying and building a broadened, diversified portfolio that consists of things like dividend-paying stocks, maybe some real estate, some private equity and alternative investments, some tax-advantaged investments. Yes, you want to have some cash for dry powder. You want to build out a diversified portfolio that's going to be an all-weather portfolio for you, whether we are in an economic boom or a recession. You probably want to consider whether or not opportunity zones, which can actually defer your capital gains, are a proper fit for you. And you want to work with a wealth advisor who has similar clients. What I've found is that oftentimes business owners who are looking to sell their businesses for 20, 30, 40, 50 plus $million, they tend to be working with the financial advisor that they started working with when they had $100,000 or $200,000. Now, that's great that that financial advisor was willing to work with them. Nothing against that financial advisor, but that financial advisor might be an expert in working with somebody that has $100,000 to maybe $2 million. Well, when you've got a check coming your way for 10, 20, 30, 40 million dollars, you may have outgrown that advisor and you might need to step it up a notch and begin to move up market and work with professionals who are familiar with working with people like you who have some sophisticated financial situations. I'll tell you, selling a business is just step one. Building lasting wealth, that is the real goal. And if you squander it, you don't get a do-over. And the fifth step is make sure you are personally ready to sell. And this is a big one. It's so important. And the reason is many business owners emotionally struggle after selling. That business was their baby. It was their identity. I mean, if you sell your company at 50 years old with no plan, you might wake up realizing that you lost your purpose, your identity. You might have to send yourself an email just to make sure that you're still receiving emails. I mean, it's challenging. You go from 500 emails a day down to 0. Very, very difficult. So what you want to do in advance is you really want to develop a vision for what your post-sale life is going to look like. And that's in regards to your investments. It's in regards to maybe your charitable causes or philanthropy, maybe new ventures that you want to start, maybe the pursuit of hobbies and interests and family, whatever it might be. Develop that vision and map out a game plan so that you can start living life according to that blueprint. And you always want to surround yourself with successful exit mentors and a sounding board and people that you can continue to confide in, people that you can get great advice from, people that can share experiences with you. That's what's going to help you to really enjoy that next phase of life. So I will tell you, a successful exit, it's not just financial, it's personal too. So if you are thinking about selling your business, don't do it without a plan. Hit that subscribe button for more insights on maximizing your wealth, both inside and outside your business. Tell me in the comments, what is your biggest concern about selling your business? And probably most importantly, you gotta get a copy of the how-to manual. I wrote this thing. You gotta go to walkawaywealthy.com, order your free book, we'll ship it out to you. And while you're there, take our 10-minute sellability assessment, which actually scores you according to how ready your business is to sell at a premium multiple.